A number of big tech companies shared their quarterly results, signaling how the higher the stakes are in the battle for AI supremacy and what it will cost tech giants in months to come. Google's parent company Alphabet's share rose 5.6% yesterday after company beat expectations for the second quarter results. Alphabet is looking to set and is hoping to add about $100 billion to its market cap through AI. Microsoft's share also fell about 3.6% as the company laid out an aggressive AI-related spending plan, saying that deeper investments in AI is required. Meta has also released its financial results for second quarter, exceeding expectations with a robust rise in advertising revenue. The company reported a 12% growth in ad revenues, outpacing even Google's ad revenue by 3%. These are positive figures. They signal that consumers and advertisers are actively engaging with these platforms despite broader economic concerns. Amit Kumar Ranjan is here with us in the studio. Amit, this is a mixed sort of result from all these big tech players. I'm sure you'll help us understand these results in through your fine statements that you've written out there, I can see. But I want to understand from you, what is the bigger message that is coming out? It's AI and the fact that advertising is back on track.
Advertising revenue is going to be across half of AI's revenue by the end of this year. And that is according to Group M's TYNY report. Now I'll tell you what is happening here. It is after big spending on AI, it's time for big earnings. Microsoft this year alone spent $10 billion on OpenAI when it took over ChatGPT. Google on just Bard has spent 300 million. Total AI expenditure of Alphabet over the last decade has been to the north of $200 billion. Apart from the fact that it lost another $100 billion due to a mistake one of its AI tools, Bard, made earlier this year. Meta's capital expenditure hit a record $31.4 billion, betting big on AI. Expenses on AI this year alone are in the tune of 88 to 91 billion and last year, and this was in an year which was marred by layoffs in Meta. The big spending, Meta, as you said, on AI tools is basically paying back. Meta shares rose 7.5%, Google 6%. Total gains of Google this year have been 46%. Microsoft cloud business has climbed 111 billion, a Nelson fiscal year ended this June. Their AI platform, which hosts Llama, which is Llama 2, which is in collaboration with, which is a Meta platform and which will be part of the collaboration between them, is accounting for 50% for the first time of their total business, Azure. Now, all this is happening because they are spending so much at a time when they're even laying off. So basically, big spending has to be offset somehow. And this is the time for making the earnings. Meta's ad revenue, as you said, jumped 12%. Alphabet's ad revenue jumped 3%. Total revenue of Meta was 12%, up to 32 billion, up from 31 million this quarter. Microsoft ad revenue also has jumped 3%. By $87 million. Okay. I'm just giving you figures right now. We'll come to the crux right now.
Right. So these figures, let's come to the crux of it. Figures are interesting, but I'm sure figures can, you can run through the figures, our viewers can. What do you really understand from these numbers? Tell us, what do you make of these numbers when you put them together, 2 and 2? My understanding is, and correct me if I'm wrong, there is a big thrust on AI spending, number one. Number two, Microsoft's big ChatGPT claim and the fact that it's going to tie up with OpenAI hasn't affected Google's fortunes at all.
They haven't. But Microsoft has taken the lead in offering AI products way ahead of anybody else. Why this frenzy? Because on the horizon, all these companies, be it Meta, be it Google, be it Microsoft, they're all seeing a jump in revenue driven by AI. AI will be, like I quoted the report from Group M, 50% of all revenue will be AI driven by the end of 2023. So that is how big a jump these companies are expecting.
Absolutely.
Another company we have not named right now, that is Amazon. They're also expecting big. The fourth company, which is the most valuable, Apple, is lagging behind in AI. But there is a catch. There is an Apple tax on all AI. I'll give you an example. OpenAI launched on iOS in May. 30% of that, whatever it earns on that app, goes to Apple. So I'll give you an example. If 5 million new subscribers are added on iOS, that will account to a revenue of 1.2 billion. 360 million is pocketed by Apple. So that is how much is the frenzy in the race for AI. Either you're offering products or you're offering platforms.
Right.
And that is why the big spending. Now it is the time, if Group M's figures are right, by the end of the year, if 50% of all ad revenue, all of it, is in the space of AI, there has to be a race.
All right. There's
Microsoft right now is leading it, even though the revenues are less.
And
it may change.
Absolutely. And you know, for me, I think also signaling a very interesting trend. During pandemic, we've seen ad revenues declining for all the big tech firms. Krishna, it's back on track, which means advertising are pumping in money.
Yeah, and the story there is that they're pumping it back into already sure shot bets of platforms like Google or Facebook/Meta. You know, they're back into all those platforms which before pandemic were the leading platforms, and sort of, you know, post pandemic, you know, during the pandemic when the revenues, you know, ad revenues came down, now they're back only to the same traditional big players. So we'll have to wait and watch if advertising revenues can be back into not just the big tech players going forward.
All right, and that of course is a very interesting story.